everyone, and welcome back to another episode of the Recession Resistant Real Estate Radio. I'm your host, Brandon Cobb, and today I've got Jason Lee on the podcast. He is the host of the Multifamily Millionaire Real Income from Real Estate podcast. He has sold well over $100 million worth of real estate in the last few years. He owns several properties, over 30 units in the San Diego area. He's got a focus on multifamily. On his show, Jason shares his own expertise as a commercial real estate agent and principal, and he shows you how to best create passive income through real estate investing. Jason, welcome to the show, man. It's good to see you again.
Hey, thanks for having me, Brandon.
Yeah, it's been a crazy time since we last caught up. I think it was like the summer of last year. There's been a ton of stuff to jump into and talk about. But for those who are listening that don't know you, why don't you give us a brief synopsis about what you do and then maybe a background on how you got here today?
Yeah, I'll be quick. That's cool that to hear your intro, because that one sheet's a couple years old, so it's cool to like kind of hear that and kind of the growth we've had. To this day we've had over 250 million in sales here in San Diego, and currently own over 100 units around San Diego. So I like the intro shows that I'm growing in the right direction. So yeah, but things were always great for me. So kind of my past before real estate, I was what they call, lazy, unmotivated, didn't have any sort of direction, no clear pathway on what I wanted to do. Fell into real estate at San Diego State University. I started in real estate during school, my junior year of college. I took, night classes on Tuesday, Thursday, worked, every single day, hitting the phones for 12 hours a day, talking to property owners, getting told no left and right. So from there, I started in 2018 and, did pretty well after graduating college. And then, eventually I felt confident enough to kind of branch out and start my own team, my own brand, which is now JLM Real Estate. We have a team of 9 agents, here in San Diego. We focus solely on multifamily sales and a little bit of, we work with developers as well, looking to build multifamily. And then on the investment side, started investing in late 2020 and grew that portfolio to about $40 million without raising any capital. And then the last 2 or 3 deals we've got some partners on. But it's quick story of me.
Walk us through those first deals that you did. How did you get started? What were you focused on? What'd you learn from it?
Yeah, first deal was definitely the toughest deal. As you know, probably better than me, the first year when you go into real estate or anything, it's the toughest year, right? So first year I was 6 months in, hadn't made $1 off the new business I started as a real estate agent. And I get my first listing after 6 months, super stoked, excited, on top of the world. And then all of a sudden, out of nowhere, the owner actually passes away and the property goes into probate. And when a property goes into probate, as you know, you need a probate attorney to get out of probate, and it takes about 1 to 2 years to do that. So that, that went to an all-time high to an all-time low, almost actually quit the industry. But from there, decided to stick with it another month, and it actually ended up getting out of probate in like 2 or 3 months. And I closed 2 or 3 deals the next month. That really showed me that success and failure live right next to each other. Because I was very close to quitting. So yeah, I'd say the first deal was the toughest deal. Small little, fourplex down here in San Diego, right under $1 million. But quick story of how I almost quit real estate right there.
Yeah, the ups and downs are very, very real. I joke that the entrepreneur roller coaster ride really is a roller coaster ride. Sometimes people want to quit 100 times, and I think it's those that just keep pushing through until the good times appear, the ones that really make it. So when you were getting into this, you had a lot going on. You obviously didn't really know what you were doing, but you figured it out. How did you settle on your niche today? What attracted you to that asset class?
Yeah, that's a great question. So the reason why multifamily is a class I've kind of stayed in is honestly, when I first started learning that real estate was a great industry to get into, as an investor and as an agent, I started networking with just people in the area that were active in the business. Mm-hmm. And after talking to residential agents, people selling just industrial properties, developers, lenders, multifamily brokers. Multifamily brokerage just really resonated with me because one, no one could control your income. So your income is, there's no ceiling and no bottom. So it's kind of what you make of it, which I found really interesting, being being naturally an entrepreneur myself. And then, also the reason why I chose it over like selling single family homes, because it's more numbers based. I'm dealing with investors all day long. It's less emotional. It's more, what's my cap rate? What's my return going to be? So that's kind of why I chose to really stick with multifamily for the long haul.
Now, with what you're currently doing, you're mostly in San Diego. Is that right? That's the market that you specialize in, or have you branched out anywhere else?
Yeah, I've done deals, around the country, like some retail triple net deals and some apartments up in Seattle. But yeah, mostly Southern California, San
Okay,
Diego.
so you're in mostly Southern California. So California has this like bad rap when it comes to business. Everybody complains about the taxes. Everybody that I've met that's, doing development real estate complains about how long it takes to get something entitled. The city is a big pain to deal with. What would you say to somebody that would, come to you and say, hey, look, I don't want to invest in San Diego because I've heard all these bad things that surround just California in general.
That's a great question. The thing is, some of my lender partners and I were at a conference a while ago in Vegas, and a lot of people were, saying California is a terrible place to invest because of the reasons you just mentioned. But a lot of them had never even experienced what it's like to invest in California.
Mm-hmm.
I mean, I can bet, the last 10 years or last 30 years, California, the core cities has had more appreciation, more wage growth, more job growth than any other city in the nation, besides maybe one or two. So that's one reason why. I mean, it's a very bulletproof market. It doesn't get hit hard like, some of the Sunbelt states like Phoenix and Vegas. Those get hit hard during recessions. They're getting hit hard right now. Here in San Diego, I sell multifamily every day, and values haven't dropped much at all, if any. Inventory is still very low. There's still active buyers looking for property. So I think it's a very, like the name of your podcast, it's very recession resistant, just like the product that you create as well. And that's why I really like California. And before we started recording, you were talking about the reasons, the pros and cons. Yes, there's a lot of cons to California, but the pros, like you said, is it's a high barrier to entry. It's tough to enter this market. It's hard to be a player in this market. The prices are higher. It's harder to build. It's harder to buy. So that means for the people that are in the market, they're constantly reaping the benefits of creating a reputation and creating a portfolio here. And, I could tell you hundreds of stories of clients that are wildly successful investing in San Diego or other parts of California.
Yeah, the barrier to entry really hit home. I hadn't thought of that. I just talked with developers and builders out there, and they're like, yeah, it's 2 years to get a piece of land entitled. And I'm like, well, how do you deal with that risk? What do you do? And I didn't think about it from the long standpoint of that's a barrier to entry. And especially if you're in commercial real estate where barriers to entry are just so crucial. I mean, your competition can make or break your investment. I mean, that's a huge advantage that, I hadn't even thought of. That kind of went over my head until I had sat down and was reading something and it was explained to me. So you started investing during a really interesting time, right? You said, I think 2020 is when you really started to build your investing portfolio. Things have changed a lot since then. This has been one of the craziest real estate markets to invest in since 2020. How has the direction of your business changed, and how have you been pivoting during all of this economic turmoil?
Yeah. Yeah, definitely things have changed. Obviously when the pandemic first hit, everything stopped and then things just started going crazy. Right. So, I think I'm just taking the same fundamentals of back then, when I was still early in the business. While a lot of people were at home and, not doing much, I was in the office every day, working, making calls, trying to network with people in my industry, virtually via Zoom or whatever it was. So I'm just taking that same mindset today and just trying to apply it tenfold. I think now when things slow down and when there's the news, like CNBC trying to sell fear of all these massive layoffs and stuff. I think that's when a lot of people contract. And when people contract is a great time to take more market share. So I'm using this time in the market as an opportunity to create more connections, meet more people, so that when things do open up more, I'll have built a great foundation to explode my business even more than I did back then.
Yeah, I love what you just said. Take market share. There's so many people that are fleeing to the sidelines right now. What advice would you give somebody who has $100,000 versus advice that you would give to somebody who has $1 million that they've fallen for the news? They've invested in the scare that the headlines are putting out, and they're like, oh my gosh, this is bad. The stock market's currently going down. Everyone's talking about the next impending real estate crash. Interest rates are going up. Inflation is rampant. What advice would you give those two investors? And maybe it's the same advice.
Yeah, I mean, for the person with $100,000, I would say you gotta invest in a hard asset that cash flows, every single month. I think real estate's the way to go. It's much more stable than the stock market, and the person who's operating it, whether it's you or a general partner, that person has way more control of the investment. That's why I love real estate, because with stocks, you kind of just you see a price, you buy it, and you hope it goes up, right? You're just hoping the economy does well. But real estate, there's a lot of different aspects you can control, like, right? You can add parking, you can add more units, you can renovate the units so that your rents go up, which increases your cash flow and the value of the property. Not only that, you get tax benefits, you're paying them a debt. So there's benefits to owning real estate that no other asset class has. I mean, real estate, there's a reason why, 90% of, millionaires made in the US are from real estate. And honestly, whether you have $100,000 or $1 million, I think the advice is the same: is just find a way to invest in real estate. And if you don't want to, deal with the headaches yourself, because obviously real estate is more management intensive than other investments, which is the only con, in my opinion, of owning real estate. It's great to partner with, someone great like yourself that can, that understands their market, that's a master at their craft, and that the investment is going to do well. So yeah, I would just say figure out a way to invest in real estate is my only advice.
Yeah. And for those that, if you don't know, maybe you can shed some light on this. You don't necessarily have to be an active investor to invest in real estate. I mean, there's a ton of passive income opportunities. I mean, do you want to shed some light on that and kind of how you work with investors in your market?
No, for sure. I mean, a lot of my clients who buy properties, they're, raising money from friends and family, and they're the ones doing all the work, dealing with the debt, dealing with finding the transaction, operating the property. And, their family and friends are just along for the ride and reaping all the benefits, and they're not doing anything, right? Besides helping fund the investment. Of course, they'll get updated. Of course, they'll see what's going on. Of course, they'll understand, what stage the investment's in. But the beauty of being a passive investor is that if you are already very successful at something else, right? Whether it's you own a very successful business, whether you're, a super high income earner in sales, or, you're an attorney, whatever it is, if you're making a lot of money in something else and it's taking up a lot of your time, a great way to buy your time back is through, passively investing in real estate. So you don't have to spend more time on another new business venture, right? Because owning real estate is owning a business, and you don't want to create another business. You want to create an investment. And that's how you can really multiply your wealth and your time.
Yeah, big time. So I think people make the mistake, one, if they're wanting to be an active investor, where they actually go find deals and manage deals, they think, oh, I got to save up all this money in order to buy it. And it's just not true. You can use other people's monies. You can do a syndication. You can do, promissory notes, make sure you get good legal advice so you don't end up in jail first. And then there's the passive route, where I think this is one of the most unknown things in our culture, especially in America. We're so focused on the stock market and bonds. I mean, that's what all of these financial advisors are touting and pushing people towards: regulated investments, because, they're quote unquote safe. And then it seems like every other day there's someone who goes to jail for securities fraud or something in these regulated securities. And so I think we're in the information age where everything is getting shared and these alternative investment classes are coming out. Historically, Main Street has not been able to invest in these larger assets, these multifamily deals. You had to go to Wall Street because they were the ones that were, had the amount of capital available. And so that's a huge, huge, huge advantage. If you're somebody who's interested in taking a more passive role, one of the biggest risks you have is investing that money with a really good sponsor, a really good operator, right? Because at that point, you're basically, one, you want to bet on the jockey and the horse being the good deal and the jockey being the good operator. What steps would you give people, since you are an operator? What would you give them on like how to vet the right operator?
Yeah, no, I think that's the most important part of, looking for a new investment, is making sure you do have a great experienced operator. One huge thing to vet is, are there numbers based on, unrealistic projections, right? I think I've seen some decks out there, from certain groups, which I won't name, that, they projected like a 7% rent growth in their area for like the next 5-6 years. They projected rates to stay way low. And those are the people that are going to get hammered, or are getting hammered right now as we speak, who bought, peak of the peak in 2021, 2022. I think also a huge thing to understand is, even though you are a passive investor, you also have to understand the values of the property you're actually buying, because if the property that, that general partner is bringing to you is overpriced or isn't a good deal, you're not going to have any idea unless you do your own homework. So I think doing your own due diligence to make sure the property you're buying is a great opportunity and there's a lot of upside to make money as a whole for everyone involved is the second most important thing. But the most important thing is making sure that, your sponsor, your operator, has a good track record. They have a lot of experience in that submarket. They've been doing this a long time. They have some sort of business experience that is related to real estate, to where, if they've been doing it a long time, they've seen maybe the last crash, or at least they have partners who have seen the last crash and have experience with the good times and the bad times. So I think those 3 items are the most important things to look for when you're vetting a new investment.
Yeah, that's great advice. Because you've got to have a good deal and you've got to have a good operator. It could be honestly, you could have the best operator in the world and they might be able to take a crappy deal and turn it into one at least where you break even. But, if it's a crappy operator and a great deal, I've seen crappy operators take great deals and just absolutely annihilate them when they're no longer good deals. And it's interesting. I've seen a lot of that underwriting too. And it was interesting. I think you're probably going to see some distress coming where all the notes are coming due, in 2023, 2024, people who weren't expecting interest rates to be this high. It's going to be really interesting. I know some operators who've suspended distributions here in Nashville on some pretty big purchases that look great and penciled at those crazy projections that you were throwing out there. And now it's in a negative cash flow situation. It's not good. Jason, tell us, what are you doing today to stay cutting edge, whether it's on the, your market or your business or, the information you're receiving? Maybe share some tips on how you're doing that with the audience.
Yeah. I think a great way to stay ahead of the market is having access to data, right? I think CoStar, Crexi, these platforms where you can see everything that's sold in your market, what's happening, what things are leasing for. I think having access to data is imperative to being a successful real estate investor or broker. I think if you don't know what's going on and you don't have, your finger on the pulse of exactly what's trading in your market and what's changing, I think that puts you at a huge disadvantage to your competition who is following this stuff like you and myself. So that's something that's really helped. Other than that, I think just, sticking to our craft, not having shiny object syndrome like some people do when, times go bad. Usually when times go bad in one business, people will say, oh, well, maybe, over here, things could be better, right? That's like one of the biggest mistakes you can make when you're in business, because you want to hone in on your craft and focus on your niche, because you can't be a jack of all trades. The riches are in the niches. So I think when people try to expand out in slower times like this are the ones who really shoot themselves in the foot.
Mm-hmm. Yep. That's great advice. Well, for those that want to learn more about you, your podcast, what you're doing to connect with you, how can they reach out to you?
Yeah. Check out the episode with Brandon. He was a fantastic guest. The podcast is called, I'm forgetting, it's called the Multifamily Millionaire Podcast. It's on Apple, Spotify, whatever. Easiest way to connect with me is probably directly through my Instagram, Jason Joseph Lee. Pretty active on there. Other than that, yeah.
And we'll make sure we post all those links at the bottom of the show notes. Man, it was great connecting with you today.
Hey, thanks, Brandon.